What do you think that your fund offers that other funds aren't already offering?
Blue Whale Growth Fund sits in the IA Global sector. In our sector, there are about 300 funds. So we are one of the 300 funds. And it's a fair question to ask, so what are you doing differently to the rest of the industry? If I compare the performance of the average manager in the IA Global over the last 10 years, they have underperformed the equivalent benchmark or iShare MSCI World as a passive tracker by over 40% over 10 years. In order to be top quartile in the IA Global over the last 10 years, you would only need to mimic the benchmark return. Let's say if you use the iShare MSCI World Net GBP as some sort of benchmark or vehicle, that is a top quartile within my peer group. So what has gone wrong in the industry? I think one thing to us is that there has been lack of funds that run a high conviction portfolio. So typically in the global space, that is not unusual for a fund manager to invest into 100 stocks. Because at the end of the day, there are more than like 1,600 stocks in the MSCI world. So even having 100 stocks is not excessive. But once you have too many stocks, it's difficult to get the level of conviction. So what we set out to do is to run a high conviction portfolio of about 25 to 35 stocks. And if you look across the 300 funds, there are only a handful of funds that employ the same high conviction strategy. So there's another 290 funds that are not doing what we think that they should be doing.
And why do you think that is?
I think running a high conviction strategy does require a lot of resources. So at Blue Whale, we are committed to deliver significant performance. At the same time, from the business perspective, we have invested into headcount in expanding the team to continue to deliver on our performance. And typically, if you don't have that sort of target or ambition, then it's unlikely that you will be investing into a lot of resources. So hence, it would not be sensible if you have only a team of 2 people to try to run a high conviction portfolio, because the amount of time that you would get per company is not going to be enough. And on that note, you could potentially be taking undue risk in the stock that you're betting on. For us, there are a team of 4, and we are just about to increase our team to 5. And if you do the maths on having one individual working 10 hours a day, and there are only 2 of you covering 75 companies, on average, you spend about 5 hours per month per company in your fund. In contrast to Blue Whale, there were 4 of us and about to become 5. You do the same maths, 10 hours a day between the 4 of us, covering about 25 companies. We spend 6 to 8 times more per company per month compared to our competitors. So all this adds up. But typically, you don't get that level of resources in other funds if you're running a small sum of money.